This is our Forex blog for July 30th, 2014, and these are our currency indexes. Before I show that, let me just show how our signals did today. It's one of our better systems day than most days. You can see starting off here, we went short. This is the risk. This is how much we made, a little bit bigger win than loss. This is our risk in the second trade. This is how much we made, about equal to the risk. This is how much we risked. This is a slightly smaller win here, and you can see a very tiny loss here. And the good news is that's the worst of the currencies I'm about to show you. Here is the euro yen. We had a strong euro, weak yen. Just absolutely killed it today. Small loss here, small win, pretty much break even. Here's your risk in this trade. It generated this much profit, about 2.5 to 3 times. Here's your risk. Here's your reward. That's about 10, 20, 30, 35 pips. Profit, small risk, bigger profit, small risk, bigger profit, and then you can see here, very, very tiny loss. And in fact, a lot of times the losses are smaller than what they initially are. You can see this is what your initial risk is. You lost less than half of what your initial risk is. And so the key to trading is small losses, bigger wins. Today was just an absolutely amazing day. Most of our signals on different currencies made money. Here is the pound yen. Let me just scroll back and see earlier in the day. We have a loss, got pretty much break even in here. Maybe made 2 pips on there, and again made about 20 pips in here. Made about 50 pips, small 8 pip loss, and then we'll take a look and see what the future brought here. Pretty much a break even, and then here you're in here, pretty much out with maybe 2 pips on that last one. Here's the dollar CAD, which I didn't even look at today really. Pretty much broke even, lost 4 pips, lost 8 pips, lost. Actually didn't make money on the dollar CAD. Here's the Australian dollar, which is in a downtrend. Short here, out with about 20 pips. Long here, made 3 pips. Short around 53 and out at 15. So it made over 30 pips there and pretty much broke even on this trade. So it made money in that currency too. I didn't even work on this one today. Yesterday it was in at 53 and got out at 65, so I made about 12 pips. There's no trades today. Pretty much I look for strong trends and look to buy pullbacks, or I look for reversal patterns that support resistance when the market's up too much. When the market's choppy, I tend to avoid all trades. So there's nothing worse than choppy up down action where you lose 30 pips during a day and nothing happened. So I just avoid all choppy trades. So here's a small risk, bigger win. Here's your risk here, and it actually lost that amount. Here's your risk here. Guess what? You got your loss back plus a little bit more. Here's your risk here. You added a small amount of profit to that trade. You went long right here, and you made a little bit more profit than your risk. And then guess what? You pretty much broke even on this trade. So the real key to trading is just to take small losses, and on your wins, try to catch more pips when you're right than when you lose when you're wrong. And you can use our currency indexes to really add to that, or add to your odds. You can see visually as a chart, just like the S&P 500, Dow, NASDAQ, the DAX, any other index around the world. It lets you see what that currency is doing. So the dollar's clearly going up, slowly at first, but it's above the previous day's high. That's a sign of strength. You want to buy the dollar against one that's weak, such as the yen. So you can just simply bring up a dollar-yen chart any time frame and look for sells, as long as the indexes are supporting it. And mainly you want to trade between 3 a.m. and maybe 11:30 or 12. But here's some of the trades I would look at from this. It's kind of just grinding up here. There's no real pullbacks, but anytime you get an 1.5 hour to 2 hour sideways rectangle pattern breakout, you get in. This is your risk. and this thing just kind of takes off. Maybe you get out of the trade somewhere in this area right here, but you can see about 4 times bigger profit than what your risk is. And it's so strong, you want to buy the next pullback. Again, very tiny risk, and your profit target's already, once the market makes its first wave, you already have your profit target. You draw your fib targets on here, and usually the first or sometimes second, you can see almost to the pip it nailed the second fib target. And so you know on this pullback, this is your risk, this is your likely reward, and you probably would have, because it looked like it was just kind of going sideways here, you would have got out somewhere around here, and you would have made, 3.5 to 5 times more profit than what your risk is. And that's the key. And when you make 2, sometimes 3, sometimes 4 times more profit than what your risk is, you make money trading. It's that simple. It's not rocket science. You should never be upset, angry, nervous, or in any way feel anything negative when you lose money if you have a good trading method. It's all about having, usually more wins than losses and bigger wins than losses. Look at this. Here's your win. Here's your win. Here's your win. Here's a loss. Look at the tiny loss here. That's it. Very, very tiny. It's a smaller loss than all of the 3 wins. And so, even if you're 50-50 and you have 5 pip losses, 6 pip losses, and 10 to 15 or even 20 pip wins, you're going to make money. It's that simple. There's nothing to worry about. Use our statistical methods to be in the strongest currencies when you're buying, and sell the weakest currencies. It's that simple. It's not hard.